This is Forex Friday. Now you should be able to see my screen. We're currently looking at US dollar versus Japanese yen, and we're going to start off with our weekly review. So this is a new trading year. Welcome to 2026. I'm wishing you the best in your trading journey this year. Now, as always, we like to look at the weekly opening price because it is our baseline, especially if we're a day trader. I really want you guys to focus on this as a influence on price, and Sunday's opening price, SOP, or the weekly opening price, excuse me, same thing. Once price is above it, it's in a premium. Once price is below it, it's going to be in a discount. And I'll come back and check the chat periodically if you guys have any questions. So once price moves up here, you're going to find more ideal selling conditions during the daily. Now, it doesn't mean every single time price touches or gets above in a premium, you're going to find all shorts and the market's just going to keep selling off. Same thing vice versa. When price is below the weekly opening price, you're going to wear that discount hat and you're going to look for buy conditions where it's ideal. So let's go straight into Tuesday London session, and we'll walk you through that TCT idea. So triple confluence trading. If you haven't watched that video, I recently posted my first video of the year. It's very insightful. It helps you find better setups for yourself. So let's go down to London. Okay, so this is the opening price for the day. That's midnight. Keep in mind, all these analogies or concepts that I'm showing right now mean the same thing. It's just for the day. So this dashed line is Sunday's opening price. We are currently below it during London session. Same thing. I'll bring it back to 2. Bring it to 2 a.m. Go on the 15-minute chart. That's how I like to view it. I'm mainly watching 15-minute chart, and the 1 minute is my entry for the day trades. So from here to here, it's 5 a.m. We're using this area to frame liquidity. That's really it. We're not doing anything too special. This is our sell side. Got a bit of a cough, sound funny. And this is our buy side here. We can see going into 2 a.m., price is below midnight already. And we're going to just call that MOP, just as an acronym. And as we go through a few more examples, we'll speed up the process of how we explain it. But this is the baseline to the idea. This is the dead zone. This is always going to be 12 a.m. to 2 a.m. This is prior to London, and this is after Asian session. This area right here. This is a dead zone. We don't trade here. We're only going to use this to facilitate marking off liquidity pools via 15-minute chart. So 15-minute swing high or 15-minute swing low, or the lowest low or this highest high inside the session. Now, sometimes there's multiple buy-side liquidity pools or multiple sell-side liquidity pools. In this example, it's only one buy-side and there's only one sell-side. Another step further, we have London opening price. Let's mark that out. So we'll leave that as an acronym, LOP, London opening price. So as you can see, we're below SOP, let's mark it up here, MOP, and LOP while going into the kill zone. So that already is putting us in a triple confluence trade condition or environment, your ideal buying scenario, because it's better to buy below the open. It's a bargain. It's a steal, right? It's discounted. And the fact that there's 3 layers on top of it makes it even better. The next step we want to see is if price is going to run sell side as it's in a discount. We're not concerned about the buy side. We're concerned about the sell side right now. So we can see there's that sell side there. And then there's that buy side up here. What's going to happen first? We're not sure. We're just going to let the market go. We're not going to force the market into wanting a certain narrative. Allow the market to do what it has to do. We play it forward, play it forward, play it forward, and sell side is taken. So immediately after sell side is taken, my eyes go up here. I'm looking for buy side. Excuse me. I'm looking for buy side. The market's going to run down and potentially purge back or revert back after raiding or purging the sell side or the sell stops on this side up here. There's a trade idea. There's a possibility that we can get back to this side of the market because this is where the market was ranging. There's market sentiment, market order buildup. Buy stops and sell stop orders are building up. So we can see the market takes this side. Now, while that's happening, simultaneously, we're going to drop down to the 1 minute chart. Now, I'm showing you the steps. I'm going to go to the 1 minute chart. We're simply looking for a fair value gap that runs through a swing high formation. And I can see it's right here. Let's zoom in. It's going to be this one right here. Now, why is it this one? Well, in particular, the swing point is in between the top and the bottom of that fair value gap. It's like a sandwich, right? The top bun and the bottom bun. It's in between. It's not exactly on the bottom of that or on the exact line of the fair value gap, and it's at the start of the fair value gap. It's in between. That's what we want. We want to see that. Let's highlight that. Just like that, and then we'll make it maybe like, I don't even know, a gold line. And we'll make it larger so you can see it there. You can even see the fair value gap to the upside. There you go. So you got your fair value gap. It's hard on the eyes, actually. There you go. Fair value gap. Speed, right? This is speed plus swing high. That's my fingerprint. That's what I'm looking for every single time. Now, if it doesn't look like this, I'm not taking it. All right? Well, actually, look. I made a mistake. The entry forms here, too. So the first one that forms below all three levels, that's the one. So fair value gap, swing high. There's multiple ones that do form, but you're taking the first one that forms. This is the very first one. Swing high formation with a speed through it. That's the one. So we're going to go long on the top of that fair value gap. For my majors, I like to keep it simple. 15 pips. 15 pips is enough. 1-to-1 scenario. Let's say for this trade, you have a 10K account. Right? What's 1% of 10K? It's $100. So if you win this trade, we bank $100. If we lose this trade, we're out in the market. $100. The market take $100 from us. All right? So let's watch how this trade plays out. And look at how sensitive price is to the opening price. And TP hit, and then we get back up to what? That buy side liquidity pool. Now, many people may look at this and be particular. They're like, oh, but what about this low here? What about this turning point here? We're not going to catch every single low. We need to find a way to be proactive, reactive, and get into the market. This is the way we got into the market. This is why we use a stop loss. Simple. This is what's going to repeat. This phenomenon repeats. Not just for London session, but also for Asian session and for New York session. Now, depending on your life schedule, you need to pick a kill zone to trade where you have that availability to look at the whole kill zone. This is 2 to 5 a.m. Again, this is a purge on the sell side and then a revert back to the buy side liquidity pool. It's that simple. It's systematic. But again, what makes this really important and what makes this more of a quality trade idea is the fact that the entry is forming below London opening price, midnight opening price, and Sunday's opening price. The fact that we're even below Sunday's opening price for the day, for Tuesday, it makes us want to buy as a day trader. We should be looking for buys. Now, I'm not saying it's incorrect to sell in a discount for breakouts. That's not incorrect. But is it something that's ideal to me as a trader? No. I do not want to sell in a discount. I shouldn't be selling my services or my goods or my products for lower than what it costs me. I should be buying it at a lower rate and selling it for a higher rate. That's the whole purpose of buying and selling. So here, I'm buying at a cheaper price. I don't want to be buying in a premium. That's what I should have said, because it's a buy setup. I don't want to be buying in a premium territory up here. I want to be buying below Sunday, midnight, and London. As you can see, naturally, organically, the market is telling you where the market is overbought and oversold. You don't need an indicator to tell you that. You might need an indicator to label it for you faster, to be more efficient. But the market itself is already telling you where the overbought and oversold conditions are. Okay? Now, with that being said, let's get into another example. Let's look at, I think it's Thursday. This triple confluence idea occurs again. So I'll play it forward. I'm going to check the chat in just a second, just to make sure we're good. Everybody can hear me. All right, we're still rocking. Thank God Discord is doing well tonight. So let's do that again. All right, first step. I'm going to talk as if I'm talking to you in a question, right? First step, what are we looking for? Are we above midnight? Are we below midnight? That's what we're looking for. We already arrived to the conclusion that we're in a discount, because going into the day, we're below Sunday's opening price, okay? So let's go back, 15-minute chart, and let's see where we are for the open of the day. There it is. Let's draw that line now. That's midnight opening price. MOP. Now let's find 2 a.m.'s opening price. Where's 2 a.m.? Here. All right, that's the start of the London kill zone. LOP. Great. So we're below all three of those confluences there. That's amazing. Now we're in a triple confluence idea potentially, right? Let's see what happens first. Does it run out that buy side? Or does it run out that sell side? And we have to see where it is in its condition. Is it still premium? Is it still discount? What's going on? Is it checking all three boxes? And let's find 5 a.m. We'll draw it up to that. Great. Let's fix this. Let's play it forward. We didn't force anything here, right? We didn't predict. Let's bring it back again. We didn't predict. Which level is it going to run? I have no idea. That's an answer I can't give you. It's a great question, but that's none of our concern. We just want to see which side of the market it's going to run on, and if that side is going to favor us being in discount or premium. If it's in a discount and it's running the sell side, that is great for you as the buyer. If it's in a premium and it's running buy side, that is great for you as the seller. Keep that in mind. If this doesn't make sense, go back and watch the video when I post it. If it doesn't make sense, go back test it. Don't just listen to me and take my word for it. Go back and experience it. Go look at a different pair. Go back 2 weeks from now. Go check December. Like go to December and check the entire month of December and tell me that these trade ideas aren't happening. If you don't truly believe me, right? Go back and check it yourself. Let's play it forward. So what happens? Sell side is rated. Bang. Where are we going with it now? Potentially back up here. That's all we're looking for. Potentially back up there. And this is the target now. I want those buy stops up there. I want to take them out. Let's see if we can find an entry. So when it runs down, it takes out that 15-minute swing low, that sell side liquidity. You need to now go to the 1-minute time frame. It's really incredible how we're able to trade on the 1-minute time frame to find some of these entry points. Very incredible. So there, now we're stalking this trade idea. We're stalking our prey. We're waiting for the kill. Let's play it forward. What are we waiting for? A fair value gap that runs through a swing high formation. And look at it right there. It finished forming at 3:15. And your next entry would have been 3:16 a.m. New York Eastern Standard Time. Look at that fair value gap. It's the same sequence. Consistency is the game. We're trying to stay disciplined to an entry technique. We don't want to switch it up too much. We don't want it to be confusing for ourselves. Okay? We want it to be systematic as possible. That's where we would have went long, at the top of that fair value gap. Same thing. 1-to-1 for my majors, 15 pips. I think is ideal. It's just the right amount. It's perfect. Let's zoom out. Let's watch this trade idea play out now in real time. In not real time, but like replay time. TP hit, target hit, back up to a premium now. We left being below London Open. We left being below Thursday's Open for the day. Is that correct? No. Thursday's Open is up here. There you go. That's correct. Midnight. There you go. And now we ran right back up to the weekly opening price. Discount prices, when the buys are happening, are not going to last long. And this is all happening around the heart of London, 3 a.m. Keep in mind, 3 a.m., you're going to see either a continuation, a strong push, or a pivotal moment. The market has lured traders to the wrong side, and now they're going to turn it around on you. I'm not saying it's always going to happen at 3 a.m., but pay attention. Around that time, you will start to see something occurring. And as you can see, we were able to get a trade idea back up to buy side after taking out sell side. That is another London session. That's 2 London sessions. The same exact sequence, the same exact conditions, just a different day on the same pair. Let's move on to now the New York session. Play it forward, play it forward, play it forward. Nice. All right. So for the New York session, it's a bit different. Okay? What we're looking at, we're still looking at the day, midnight opening price. We're still looking at that. We didn't forget about that. And now we're looking at a different dead zone for us. So New York session is going to be 7 a.m. And then the dead zone is going to be 5 a.m. to 7 a.m. So take a look at that. Move this over. And if you want to see it highlighted, I'll show you here. If that's the right one. There you go. You see that? I know, like, do I have the London close on here? Yes, this is a full trading Forex day. Right here. Probably has 2 London sessions on this one. That's why it looks so bright. There you go. Right, that's a full Forex trading day. And then you have also the dead zone. It's another gray in the session that would come up here. If I were to play it forward, just to show you. Oh, I guess I took it off. But let's go back to the New York session before we get off topic. Let's take off the colors. We don't really need this anymore. We know what we're looking at. So again, excuse me. This is 5 a.m. to 7 a.m. That's the dead zone. I like to call it the lunch dead zone. The London lunch dead zone. And then we got 7 a.m., 10 a.m. This is where you're going to trade. You're going to make your kill or try to take your shot to make some money out of the market. So with Sunday's opening price being there, midnight opening price being here, we're going to frame out liquidity pools. We got our sell side. And I believe this is going to be the buy side. Just want to double check. Take this off, review it. Yes, that is going to be our buy side liquidity pool. So we got money up here. Right, we're not doing anything, and money down here. Buy stop orders, sell stop orders. Right, that's all we're looking at. Can't force which side it's going to take first. Let's play it forward. Immediately, right? Price fails to break that level. It drops down, drops all the way down. Let's keep watching it. I believe it drops down. It could be incorrect. And I think it takes our sell side. We're going on 1 minute just to double check, make sure we're right, make sure we're looking at it properly. Okay, we touched that level. We raid sell side right there. Price comes down, takes it out. And do we have an entry to the upside? Unless this was the sell setup idea. Yeah, for this example, I don't think there's any setup. But the same sequence does show here. It looks like it does run buy side or gets to that same level. Taps that. Runs down. Taps the sell side. Just very slightly on the same exact level. Very interesting. And then runs right back up. So there's a buy side purge to a sell side revert. And then a sell side revert back to that new buy side that it created above those levels and pushes up higher. Not sure why I noted it down for a New York session. Maybe I was wrong when I was back testing and looking at it for the review. But nonetheless, it's the same idea and the same concept, okay? Let's move on to another pair. Let's move on to gold. Very interesting with what's going on in the world, right? Let's move on to gold. take this off. Let's go into hourly. And let's take a look at this. All right. So I believe there was a Monday London. So we'll look at London on Monday. And the same thing, I have it on the chart again, right? Weekly opening price. Since we're above Sunday's opening price, this entire week as a day trader, again, as a day trader, I would be looking for shorts. Going in each day looking for short opportunities. And simply put it, I'm looking for buy side to be ran out and selling above the kill zone's opening price and the daily opening price. That's it. That's the other two confluences while I'm above the weekly opening price as a day trader. All right? Let's look into that Monday London session. Let's bring it back. Close enough. And let's look into this right here. Where's 2 a.m. here? 5 a.m. there. All right? Let's speed it up. We're going to go a little faster. So again, it's going to be posted. Hopefully the file is good and the recording is doing well and they can hear me. All right. We got the opening price here. And again, we're above Sunday's opening price. This is London's opening price, LOP. This is midnight opening price over here. Very fascinating stuff here, I'm telling you guys. MOP. The concept is very interesting. Now that we have that, now we arrived at that, you can see so far it's in a triple confluence premium condition. It hasn't ran out any side of sell side or buy side yet. But it actually did. So this is a swing high. So it ran out buy side. So it starts the systematic approach already. We ran buy side. Now we want to see. It just needs to run one level. You can see there's two levels of buy side here. Once it runs one level, it starts the chain of command. And now this is our sell side. This sell side liquidity below that swing low. Now, at that point, we leave the 15-minute chart and we go to the 1-minute chart. And we're looking for what? We're looking for price to print the entry above all three price points. So clearly it came back down to the open of the kill zone. We wouldn't do anything there. That's not what we're looking for. At least in the way I'm teaching you. There's other nuances, of course, that I teach the other members. But just as a generic thumb rule, right? Just want to sell above London is your key. You can sell at the fair value. You can sell close in that area, which isn't bad. It's not a great area to sell from, but it's okay. It's not bad. Let's play it. And as you can see, look at that. You see that fair value gap? Do you see that swing low? 1, 2, 3. There you go. There you go. You got that swing low formation. You would go short here. You're looking to go short here. Again, you're going to use a stop loss. This is gold. I would risk small. I would risk very small. You're not always going to get your final TV or your full TP, but the general direction or the target of what you're looking for is what we're really concerned about. Right? The premise of why we're taking the trade. Why did we take this trade? Well, I'll tell you. First and foremost, we're above the weekly opening price. It puts us in a premium condition for the week. Secondly, we took out buy-side liquidity pool while also simultaneously being above the daily opening price for Monday and the kill zone's opening price for Monday. Great. And then the entry forms there. Now we're looking to see if price can return back down to this sell side target. That's all we're looking for. Again, this is gold. I'm assuming that most props or most brokers are going to have a smaller leverage on gold. That's just how it is. So risk accordingly. Play it. You can see we definitely eat some drawdown. And that's the area that we were looking to go short in again. We're still selling above London, midnight, and SOP down there. Now we go into New York session. As you can see, that's the New York session over there. And that same trade we took from London ends up getting down to that sell side liquidity pool. Bang. Great trade. Now, I don't believe it gets all the way down here to the final parameter for this 1-to-1 scenario. However, you can still take some partials. And at this point, this could be a great area to buy too. I'm not going to try and get off track, but this could be a great area to buy. It's liquidating sell stops. There might be a New York buy opportunity here. But that's not in the triple confluence idea for this week, okay? That's another nuance we can talk about. There is an opportunity here, but the confluence is not triple. I believe the confluence is singular or double here. Okay, let's move on. Let's go to another one. London was very popular this week. Not a kill zone I preferred to trade, but I did trade. I did trade the Wednesday, or was it the Thursday? I can't remember which one I posted or took in the chat. It was the Thursday one that I took. The Wednesday one I did not. The Thursday one I did. Okay, again, where are we according to the weekly? We're above, so we're premium. Ideal sells. Great. Awesome. Now we got that understood. We're going to move on. We got midnight opening price. Make it a little thinner, and then we're going to play it out to 2 a.m. So I got that right. There we go. 2 a.m. So we got LOP. And we got MOP. Nice, nice. All right, let's keep it pushing. Let's keep it pushing, right? 5, 2, dead zone in between. We're waiting for price to do what? We're waiting for price to take out buy side or sell side. Well, since we're above the Sunday's opening price, we would prefer it to take out buy side first. And it does. It does it right here. That's that level of buy side. And we'll mark off each one that you see here now. You see, this one takes out multiple levels of buy side. But it only takes one level for it to trigger the chain of command. This is our sell side here. Fantastic. So let's bring it back to where it takes out that buy side there. And you'll see, again, we're simply framing where we should be looking and objectively doing it. This is not subjective. What I'm showing you is very objective. This is not fake numbers. This is not fake data. This is data that all happened this week that you can go back and check for yourself. And this phenomenon is repeating in gold. The same London trade I just showed you in UJ is happening here for gold. Buy side, it comes up, it takes that out. So at that point, when it runs under that candle, we go on a 1 minute chart. Take a look at it. Now we have to stalk the entry. We have to stalk the entry now. But the entry is likely going to have to form above this opening price for 12 a.m. So we still have to wait for all conditions to be met. So we wait. We don't take any trade. We don't react immediately. We wait for all conditions to be met, then we take the trade. Now we're above midnight. Now we're getting above midnight. Now, look at it. Oh my gosh, this is beautiful. I love seeing it. So textbooks for me. Here to here. Do you see that? Boom. Change this to blue so we can see it. All right. And let me get that back. Let's take off the session indicator. There you go. So where would you go short? You would go short here. Right? And you would set up your parameters. I'm not going to set it up just to save time. But you would take that trade there. Whether you have a little bit of drawdown or little to no drawdown, you still risk properly. You manage well. Again, where's that entry forming? Where's that blue shaded area box forming? Above all 3 levels. Sunday is all the way down here. Your entry's all the way up here. No reason why you should necessarily be trying to force buys as the day trader. I'm not saying there isn't opportunities for you to buy. There will be opportunities to buy. But why force that if the environment is telling you, yo, we're overbought? $5 a.m. comes around, London is done. You're still technically in that trade. Now, the way you manage your stop loss is totally up to you. I mean, the best way to not get stopped out is to keep your stop loss where it is, clearly. And there it is. TP or your final target would have been hit. Do you see that? That's gold. Imagine taking the trade on gold. You feel great. Excuse me. Take a sip of water. You'll feel great, man, taking that trade. That's a fantastic trade. You can't tell me that doesn't get any more better than that. It wasn't the highest selling point, of course. It wasn't. We're not always going to catch the top. But we got a quality trade. Quality. We want quality. We're not looking for quantity either. This setup may only happen once a week. We have many opportunities to see if it does. But if it's only once a week, then great. We're waiting for the best setup. If it happens twice a week, better. Happens 3 times a week, great. Phenomenal. We love that. Let's move on to what's next. We got a Thursday one, and this is the one I took. This one was nice. And pause. Let's go back. And I'm just going to show you the end result just right away so we get into the next topic. I'm definitely a little hungry. All right. Whoops. Where are we? There you go. 2 a.m. Find your sell side. It's pretty easy to find your sell side. Is this a swing low or the lowest low or the last low that forms for the session? Doesn't take too much to find it. And you get your buy side. Double check just to look, make sure. Yes. Actually, no, it's this one here. Am I correct? No, it is. So going into 2 a.m., this candle here, going into London Open, right there, it runs up and takes out that buy side there. Do we all see that? That's 2 a.m. It runs up, takes out that buy side above that swing high. This is our open for the kill zone. This is our open for the day. Nice. Again, we're above Sunday opening price. We're so high above it. All right. Have we purged anything? Yes, we did. Let's go back to where we purged. We purged around here. Go to the 1 minute chart. I know you can't see it because of that line here. But look, we purged that buy side there. Do you see that? 1 minute idea. It's smacked right out the park. Anybody that was selling, right, let's think about it like this. Anybody that was selling, let's say they went short, I don't know. Just taking a random idea that I see in the chart. Fair value gap, okay, cool. They put their stop loss above that high. Or maybe even this high. Right, just to be even more safe. But it's an obvious area that you're going to put your stop. The market's going to take it. Right, that fair value gap, price trades it, and it runs them out. What do traders do when they get knocked out of a position? And they reconsider. Right, there's going to be a domino effect or a snowball effect of psychological warfare that the trader's going to go through. What are they going to do? They're probably not going to convince themselves that it's going to go short. They're probably going to flip the switch and go long. They got you. They got you. And that's happened to me plenty of times. I'm not perfect myself, and I'm not saying I'm free from that pain either, but we're going to try and be more disciplined this year, right? We're going to try and be more consistent because we have the data. And we'll get into the whole spiel at the end, right? So let's play it forward. And you can already see, look at the entry. You see the entry? That's what it looks like when it just freshly prints before it gets the entry, before it comes back and touches the entry to get you in. There goes your fair value gap. Where's your swing low? Oh my gosh. Again, Deontay? No way. It couldn't happen again. Third time this week for gold. The same triple confluence idea. You had 3 triple confluence sell ideas for gold this week. How did I miss that? It's okay. You're informed now. Welcome to the team. And you go short here. Right? You go short and you try to hold that trade idea potentially to the downside, of course, or potentially to what? The sell side that you have during that dead zone. These are your targets now. Target. Play it forward. Price taps it. Beautiful. Strong reaction. And look how sensitive price is around these objective levels. You can't tell me that's not coincidence. I know there's algorithmic levels, of course, psychological levels, But tell me this is not manipulation or something that the algorithm is keying off of, is keeping note of. Look at that. Look at how it runs up into London, spikes into it, shoots down. Runs back into London again, shoots down. Many times. Trying to get traders back into buying. And this thing melts. Melts. And I wasn't able to stay up, and that's when I sent that message on Telegram telling you guys 3 a.m., right? 3 a.m. we're gonna probably either see the market speed up, which is what I was anticipating. But there's a catch to that. It's non-farm payroll week. And this is the day before NFP, Thursday. So I wasn't expecting much in this day. Or the price action to move fast. Price comes all the way back up, close to the entry. Back into opening price. Back into London opening price. Multiple times. Session is done now by this time. 5 a.m. Session is done. Now we're going into London. New York. And then bang, hits it. New York purge. Or New York revert. Correction. But technically you would say New York purge. Because it purged it going into the kill zone at 7 a.m. Just to show you the color on the chart. See that? Nice. So we purge it. Maybe New York session gives a buy. But it's not going to give us a triple confluence idea. It's more than likely a double confluence because, again, if you're thinking critically, we're above the weekly opening price. So it would be a contradiction to be buying in a premium condition for the weekly bar. But however, there are instances where you are in a premium and you are on a discount for the day. Look at this. You're on a discount for the day. And you're on a discount for, hopefully you guys can still hear me. Heard something. Okay, we're good. Discount for the day or discount for the session itself. Right, so 7 a.m. and then midnight. And you can have a double confluence, 2 out of 3. All right, so hopefully you guys understand that. Again, I'm showing you the triple confluence idea because I believe that's the one that's the easiest. It's going to give you a lot more probability, a lot more accuracy, position yourself to take more drawdown instead of selling low. You're going to sell high. You're going to already put yourself ahead of the curve, ahead of a lot of more retail traders the way you think this way moving forward, all right? It's not going to happen overnight. It might feel funny at first to think about it this way, but yeah, that was gold, okay? London. Thursday. That was a good trade idea. Let's move on to GU. So we took a GU trade. I only took one GU trade this week. It was a Monday trade. It was awesome. All right, the data has been showing me that Mondays are great trading days. If you have any questions, please let me know. I'm just checking the chat periodically, coming back and forth. Let me know, all right? All right, so let's head into, just look at the overview of the, just look at the hourly chart and just look at the way GU formed this week. This is the weekly candle. It opened here, dropped down into a discount, gave some type of rally, went into a premium, made the high of the week on Tuesday during the London session, and then sold off for the rest of the week, going into non-farm payroll. Crazy, right? Got that quick accumulation, manipulation, and then distribution. We're all the way back down to where the market was consolidating and being manipulated to just be range bound for a bit until they allowed it to fly freely. Okay, let's go back to Monday and let's look at this New York session. Let's get some repetitions and some experience to the New York session. Again, if anybody tells you that hindsight is not beneficial, they are lying to you. Data is very important. They collect data on human beings all the time. What do you think they're doing with this data? Excuse me. What do you think they're doing with this data? They're trying to understand how we like to purchase, what makes us tick, what makes us swipe our credit card, what prices make us say no, we're not going to buy that object or buy that item or make that sale. Data is important because you could do a lot of things with the data. You can start to have the autonomy to cut off all the fat and focus on the things that actually matter, that actually convert you money, that actually convert you sales, that actually convince people, right? You want that data. So if anybody tells you hindsight is 2020, yes, of course it's 2020, but you can use those experiences in the past to help you make better educated guesses in the future and take calculated risks. Does that make sense? I hope that makes sense, guys. All right? The data is important. Data is very important. But we'll get back into that idea again towards the end of the video. 7, 10. You even have news at 10 o'clock too, right? News can play a factor into this too. The only thing I think, in my opinion, before I go into a long tangent, in my opinion, the news is the excuse to move price action fast. Hear that again. The news is the excuse to move price action fast. That's it. The market was already going to execute what it had to do, but it's just accelerated because of the news event. Let's look at 5 a.m. That's that dead zone. 5. Let's find that sell side. This is the sell side since it's the lowest low. It doesn't have to be a swing low. You see that? It doesn't have to be a swing low, but it is a sell side liquidity pool. Let's play this forward one more because sometimes that candle can be a swing low. There it is. Want to double check because I can't see the wick on this line or the history of that line. So yes, the next candle will likely, I see this all the time, likely be a swing low. So this candle here is a swing low. 1, 2, 3. I'm not putting that there. It's not pretend. There's a swing low there. There's that wick. And you can see what happens instead. Price comes up and takes out what? Is looking to pull and take out this buy. So I'm getting ahead of myself here, right? Kind of giving you the answer if I'm putting the target there. And this is the trade I took on Monday. Sent it to the chat. You guys saw that. Buy side purge. Quick revert back down to sell side. This is also a target too. All those sell side areas could be targets too. But let's look at what happens there. Stick with me, all right, guys? Please stick with me. Opening price. Awesome. Next one. There's midnight opening price. We got to go back and get that one. We got to get that data. Go find that confluence. It's somewhere over here. We don't have to be perfect, but it's somewhere over here, right? That's the opening price over there. Where are we? We're in a triple confluence idea again. New York opening price. Sunday, midnight. Let's get it on the chart so we're not confused. Let's write all the annotations, right? SOP. Corrections is MOP. And the other line here is SOP. Whoops. Just messed with my demo trading account. Whoops. You always fix that. SOP. Nice. Okay. Now zoom in. Pay attention. This is 1 minute chart. You're not going to get any more accurate than this. I'm telling you. Find your swing low. I believe it's the other one. But either one works, right? 1, 2, 3. It will take the first one. That's it. Again, it's not on the start of that fair value gap, nor on the end. It's in between like a sandwich. Top bun, bottom bun. The swing low is in between the two areas, okay? We go short here. Right when this candle touches that, you're going short. Institutional order flow entry drill. As soon as it touches it, that's how you're getting in, right? That's that practice on how to get into the market. People ask, oh, how do you sell? When do you sell? Right there. The first one that's readily available to you. You're not going to try and predict, is it going to pull into this bearish order block? I don't know. It's going to pull back into this fair value gap and this bearish order block. I have no idea. But I know this entry is where I want to get in. Point blank, period. Oh my gosh, this thing dumps, bro. Dumps. And then, oddly enough, it runs right back down to 12 a.m. opening price for Monday, January 5th, 2026. It taps that level, and all of a sudden, it just turns right back around. Isn't that interesting? Is that not very interesting? Look at how it teeter-tots back and forth like a seesaw around these levels every time. I'm objectively showing you things that are more important to you. You don't need to be worried about certain levels. Just use what the market is giving you. And it turns around. And if you didn't bank anything, of course, if you didn't move your stop loss, if you didn't have a TP, you would have lost this trade. All that work for nothing, right? You have unrealized gains. A lot of people ask, where do I put my stop loss if I'm in profit? I don't know how to trail my stop loss. There's no perfect way to answer that question because the market is going to come back and probably trying to take it out. Unless you caught a trending environment and it happens to be very perfect and there's not hard and harsh pullbacks, going back up to take out buy side and then go short again. Back up to take out buy side and then go short again, right? That's that, what's the word? Buyer's remorse, right? People are trying to buy the market every time it rallies, but it keeps fading on them. Every time it buys, every time they get a rally, a peak, they try to buy it, but then it fades. and then it fades and it fades. It's a psychological problem that people face. They don't want to give up. Oh no, I know it's going to turn around. You're shot. You're shot. You want to be honest with you? You're shot. You missed your shot. All right, that's GU. Let's move on to another day. That was New York session, right? Get our reps. Thursday was very popular. Oh, this New York session was very popular for GU, for the triple confluence. Speed it up. Speed it up. Come on. Come on, girl. Yes, sir. Okay. Let's go to 15-minute chart. And this is our last pair that we're looking at. Let's go back to 7, sorry. And we'll go a little faster, right? I already know where it is. So 5 a.m. That's that swing low here. We'll just make it all black lines. And then we got a buy side here. And we have one just above it too. So you get this equal tops, double top, right? Buy side. Great. 7 a.m. Let's get that up marked off on the chart. New York open. You see how systematic this is? 1, 2, 3, 4. Take the entry. You wait for it. Or you wait for whatever amount of confluences you need to set up. MOP. Where are we? Are we below weekly open or above? Currently, right now, just currently where it is right now, it's below. So you should be thinking buy. So you would prefer sell side to be rated and pull itself below New York open and midnight opening. But we don't know yet because it could go either way. It could come back up with the Sunday's opening price, take out the buy side, and give you a short opportunity. So we're not looking to predict. And I think that's also sell side. No, it's not. Okay, so we're good. So we're going to keep playing it. Play. And what happens? Sell side raid. Huge sell side raid. Going into 8:30. Huge. Market pushes down really fast. So it takes out that sell side. Remember, this is 5 a.m. here. Takes out that sell side. We're looking. Our eyes should go like this. Eyes go target back up here. You can even target the buy side that's forming inside the New York session between 7 to 10. You see that swing high here? You can also target that. Okay, but let's put this here just to target these two buy sides up there. We're below New York open. We're below midnight. We're below SOP. You have a triple confluence buy condition. Triple confluence for discount. Let's go to a 1-minute chart. Look for your entry. Let's see where it's at. We don't have anything yet. Got a nice little BPR going on there. That's nice. Play it. I still don't see anything. Nothing. And I think this is it. Yes, it just made the cut. Right there. You see that line? And do you see that fair value gap? And I'm moving a little faster, but it's a repetition here. You go back and check other pairs as well. That's the entry. That same sequence. Swing high, fair value gap through it. Speed through the fair value gap. Speed through the swing high, correction. What would we do? Go long. Again, 1-to-1. 15 pips, I find to be reasonable for the majors. That's UCAD, EU, NU, EJ. Yen crosses too. All the Forex crosses, majors. I think 15 pips is enough. We retest that sell side, and now look, you start to accelerate again. We hit New York open again. Retest that sell side level again. How we doing in the chat? We good? You guys see the chat? All right, we got a few folks here. Nice. Gotta be patient. See, does it get back up there? Save us time. 5-minute chart. I think it does. Probably going into New York session, NFP. Does it run the stop loss? Now we're going into Friday. We're just looking at it, see if there's any unrealized gains. I think we're stopped out. Yeah, we're stopped out. So we never get back up to that buy side there, which is okay. But we're still able to achieve and acquire that GU long triple confluence. Again, just a little quick recap because we're going to take a break and go into another segment about swing trading or position trading via daily chart. For my people that don't have time to look at the chart, you might have kids, husband, a wife, girlfriend, boyfriend, whatever, right? You have other people that depend on you or desire your time or need you. So this could be something that we could pivot into and talk to that can help you frame a model for you in your trade style based on your personality and based on your life schedule, okay? So again, just a quick recap. We'll come back and end it off with an NFP trade with UCAD. It was fantastic. I sent it to the Telegram chat this morning. It was a great trade. Again, you can see it takes out sell side, and then it prints the entry below New York open, Sunday open, and midnight. Again, we're using the weekly opening price to find out if we're going to be a premium or a discount. It's very objective. What I'm showing you, it's not subjective. This is not opinion. This is not opinionated. I'm very confident when I tell you this. This is objective. I'm showing you objective things. I'm giving you the step by step by step by step all the way to the entry and all the conditions that you need to take the shot. We showed it on gold, we showed it on UJ, and we just showed it on GU. All the same models, different pairs, and particularly same days too. Right? UJ showed what? I think it was a buy setup, UJ for Monday. And you can see inversely, GU showed a sell setup above Sunday's opening price. Inverse correlation is there. Okay? Now let's move on to, and we'll come back. We'll move on to let's go swing trade. Open anyways. Hopefully that saves the layout. And hopefully you guys can still see my chart. If you have any questions, whoops, you're not supposed to see that yet. Let's go to daily chart. That was the UCAD non-farm payroll idea. Let's look at gold. All right, this is a good example. Rather look at gold. And let's clear the chart. Okay, it's cleared. Okay. Is it fully cleared? No. Move drawings. Again, before I start this, I want to say everyone's going to tell you, oh, hindsight is 2020. I know it's 2020, but you need to use that 2020 vision, excuse me, to gain experience in the market. There's no way you're going to learn if you don't go back and collect the data and see how the market performs and see how the market moves. You need at least, in my opinion, at least 6 months of data to say confidently you understand your model. And you understand the strong points, the weak points, and where it can be adjusted and optimized. If you don't have 6 months worth of data, go get 6 months worth of data, refine your model, and see where it's performing, where it's not performing, and what you need to focus on. The data is very crucial. Right? These athletes in the world now, why are athletes performing at a higher level we've never seen? Because we're collecting data on humans. They're moving faster. They're jumping higher. They're producing more acceleration. They're producing more force because of the data, the training. All that stuff is being documented so that we are more efficient. The same thing when it comes to all these corporations. They're collecting data. They're moving efficient so they know what makes them money and what makes them not make money. Okay? Same thing applies here. For this example, I learned this ideology or methodology from Larry Williams, very legendary trader in the trading world, especially for commodities, right? If you read his book, Long-Term Secrets to Short-Term Trading, or How I Made $1 million this year trading commodities. It's like a big blue hardcover book, okay? I learned this idea or turning points or pivotal moments by Larry Williams in the book, Long-Term Secrets to Short-Term Trading. Okay, you can use this for a short-term idea, or you can use this and you can see the power to it in long-term trading. So let's get into it. Let's say, just for example, I'm going to show you an example. I'm going to show you a losing example because I need you guys to see the actual concept of it. The concept Larry Williams was showing was mainly for a buy setup, but anything that you could do for buying, you can do for selling, inverse, right? So happy that the Discord is playing well tonight. Larry Williams was saying, if you get a candle that closes above highs, right? He was saying this for the sell setup. For the buy setup, but I'm showing it inversely. He was saying if you get a candle that closes above or below, right? Let's say for the example, for the sell setup, a candle closes above highs. It's closing above a bunch of highs. It closed above this high, this high, this high, this high, this high. Again, let's just forget. We just opened up the chart. We're starting blank, fresh. We just opened up gold. It's the day October 8th, Wednesday, 2025. And this is what we see. So according to Larry Williams, he would say this candle is a sell signal. It's a sell signal because the candle's closing above the highs, and traders the next day are thinking it's going to continue that trend. That's not always the case, right? We know that there's going to be a stop to that trend. And how do you predict or take an educated guess of when that trend is going to occur? A candle like this. There are other parameters that we can add on top of it, but let's keep it very simple so we can conceptualize it. He would say if price action returns back down to this candle's low without taking out this candle's high or having a higher close, more specifically having a higher close, then this is a turning point. He would say sell here. And again, he was talking about this from the buyer's perspective, so reverse that. We'll talk about buy setups too. He would say sell here. So if price action were to get to that candle's low, you would sell right there, looking for some type of breakout. That's it. And in that same breath, it is going to be a swing point or some type of swing formation within that general sense of that candle. And as you can see, it is the swing high. 1, 2, 3. There's a lower high on the left and a lower high on the right. This is very basic stuff that we're talking about. Finding swing points, right? That's a liquidity pool. So we would take the educated guess. I'm not talking to you, Siri. We would take the educated guess that this high, or whatever high is above this, because sometimes it can be round out. We would take the educated guess that this would be protected. Okay? Sometimes that's not the case, but just keep rolling here. So this is the idea. And we would see whether or not this would trade on for X amount of days. Okay? Or a couple of days, or maybe a TP, or a certain number of pips that we want to hit, or a desired amount of pips. But in this example, you can see price clearly comes up and would have probably blew out whatever stop loss you had above there. So let's follow this idea all the way up to real time. Okay? Let's follow this concept and take what we're talking about inverse for the buy setup too. So again, this candle coming up and closing above highs, that is giving us a sell signal. Okay? So we will follow this candle. We would be stalking this candle's low. That's it. We will stalk this candle's low. All right? Let's see if price gets there. If not, we totally forget about this candle and it doesn't. We get a higher close. So let's move it up again. We don't care. Let's clear this off. Let's use array. This is faster. This candle here has a close above that. We'll be looking at that candle's low here. Does the candle get down there? I'm not sure. No, it doesn't. It gets a higher candle close. So we keep following. So there's a trend here following. But eventually this trend will break. It will break. It will give some counter trend candles or give a nice opportunity to catch some distribution to the downside. So we're still going long. Gold has been outperforming, man. You guys can clearly see what's happening in the world. So look at that. So we got an opportunity here to get a short. It returns back here. So you would go short here and hold that and have a stop loss wherever you want to aim it for, right? We're not going to get into parameters right now. So you would be in this trade short already with a stop loss somewhere. And you would hold for your desired execution. And you can see the market ends up selling off. Right? It's very fascinating to see that. And within that same breath, it's a part of a swing formation. Do you guys see that smash candle? That's what Larry Williams was calling it. He was calling it a smash candle because it smashes out all the buyers. Everybody sees this day as, yo, I need to go long the next day. But what happens if it turns around quickly? You smash out all the buyers. Okay? So, and you knock out all their sell stops. And this candle, 1, 2, 3, it's a part of the swing formation. This candle here is the lower high on the left. This candle here is the lower high on the right, and that's the swing high. So it's a part of. Oh, incorrect actually. Well, I thought it was. It looked like it was. It looks like a double top. We'll double check. High. Who's higher? This candle's clearly higher. Is it? Yeah, this candle's clearly higher. So it's not a part of the swing formation, unfortunately, but you'll see many times it will be a part of the swing formation. Now let's take a look at what we have here now. Now, price did sell off. Right, you probably got into sell. Let's say you're in this sell still because of that signal. This was telling you sell. This candle here was telling you sell. We're still in that. Let's still in that, and we're still in it now, right? Let's say at some point, I don't know, you get out, you take your partials, right? Or you hold forever. It's totally up to you. But now let's start talking about ideas for the buy setup. So technically, let's remove this. This to Larry Williams would have been a buy signal. Is it warranted to take? No, it's just a signal. Doesn't mean you have to take the signal. Just because someone sounds a signal off doesn't mean you have to come running immediately. This is a signal. It could be a buy signal. But we don't get that because we get a lower signal. Why? Because this candle's closing lower than that one. So this is the new signal here. If the price action returns to this candle's high, we'll write it out here so we can see it. You would buy here. You can either buy here or buy on the following day once it gets here. Okay? Play it forward. It doesn't happen, so it shifts again. And we'll just keep moving this down then. We'll buy here instead. Does it give us a signal to buy? Possibly. Yes, it does. So we're in long. Whether it comes back and puts us in drawdown, we're in long, just based on the idea. See that? Just because of this one candle, it gave you an idea. Yes, there was ups and downs. There was drawdown. You're on a daily chart. I suggested this for people that didn't have time to sit there and day trade and have time to sit down and watch the kill zone. Some of us don't have that luxury, okay? And technically the same thing happens again here. Do you see it? Technically it does happen again here. A candle that closes below previous daily lows. Now in the book, more specifically, like now if we start to add metrics to it, I think, don't quote me on this, you got to go back and read the book. He said once it closes below, I think 3 to 5 days, it's great. That's a good buying opportunity. But this one is only 2. You get to pick what metrics you want. It could be 1 day, it could be 2 days, it could be 7 days. It's up to you. There was also another metric to it. He was talking about if it's just recently rated some type of liquidity pool or it's in a deep discount, depending on high to low. So let's say this high, right? This high to this low. Cut that in half, it's in a discount. Let's see. There you go. It's in a discount. It's low between this range high and this range low. So this smash candle is forming in the discount area. So it would be something that you could consider, okay? But same thing again. You would buy at that candle's high. And look at how price gets through it. Let's keep following along, right? Let's say you're in this trade and it's going well. But you're getting signs of sell signal. This is a sell signal, right? It's telling you sell. I'm going to sell soon. I'm going to sell soon. And it does here. It gets back here. This would have been sell here. And now you got to see. Now you start to see how it goes back and forth. Sell here. And the better question is, which one should I be holding, Deontay? You will have to figure that out on yourself, okay? I'm just trying to bring an idea for you to conceptualize so you can start to see how you can frame ideas on the higher time frame chart and not have to worry about the lower time frame stuff at all. Sell signal. Sell signal, sell signal, but doesn't mean that we're in it. No buy signals, but the market just keeps going up. And I think the market just runs hard. And this is a very interesting one. I like this one. This is when the following day literally immediately gives you the signal. This would have been a sell signal, doesn't happen. This would have been a sell signal, doesn't happen. Nothing here. So when it comes to this, and when you see the next day, would you be looking at this candle at all based on what we're talking about? No, you don't even care about this candle because it doesn't even close above the previous daily high. So we're still looking at this candle. So this setup can still occur here. It can still occur right there. Price can still come down and print here. Okay? And then we get this candle. And then the same thing. You would sell here. This is the sell signal. If price gets there, you will sell there. What happens? Huge candle. Large candle. And then I want to jump into another concept. Not that I want to derail or anything or change subjects, but it will help you. When you see a large candle like this, do not expect another large candle like that to happen again. All right? No, I can't take this phone call. Yeah, I can't take this phone call. Take that phone call another time. Do not expect another large candle to happen. This is a large cycle. It went from small dailies to large day. Many people want to know, how do you catch large days? Some people might say it's ideal day a week, whether it's Tuesday, Wednesday, Thursday. And I've been finding out with the data that Mondays tend to be better performing days. And happens, luckily this day happens to be a Monday and it sells off really fast. Okay? The next day, don't go in here expecting price to move down hard as well. Again, this in its own breath too, I know it sounds confusing, this in its own breath too is a is also a buy signal. Okay? It's also a buy signal. This candle's closing below 1, 2, 3. There you go. It makes the minimum requirement. 4 candles. If price gets back to this candle's high, you can buy potentially. This is a large one. It's a very stretch, but it is a signal. It's a signal to you. Play it forward. Play it forward. Play it forward. There was a short-lived sell signal here probably. Right here. Close above. Price gets back down to that candle's low. You sell there. And this is where we are. And I don't think gold's going to come down. I personally do think because of what's happening historically, gold's going to keep rallying. Like, year of war, year of inflation, year of highest cost of living, at least here in America I can speak of. I know other parts of the world too. Fiat currency is depreciating in value. Consumers don't have high spending power as they used to. Consumer psychology is changing, right? The way people are consuming and purchasing goods, that's all changing. So that is that segue to position trading or day trading. And if you have any questions at all, please let me know so I could spend a little time, answer it, and come back. Is the TCT, it's a mouthful, dependent on economic calendar in the sense that we would anticipate the model on red folder days? Yes or no? That's a great question. I love that question. Yes and no. My answer to that question is news is the excuse to move price action faster. So on those days where there are news events, you would anticipate great price action that's not lethargic, price action that's going to be snappy and dynamic. Now, this is where that was a great segue, actually. It ties into non-farm payroll, which is a very red folder, right? Look at today. Non-farm payroll for UCAD for Friday. Take a look at this. I already have it on the chart, but we could clear all this off just because. Let's bring it back to the beginning of the day. We know the well-anticipated trading day for the first week of a new month is always going to be non-farm payroll. Let's find Sunday's opening price. Where are you? It's somewhere over here. Doesn't have to be perfect, but we know it's right down here. Sunday, right? Sunday's opening price. So clearly, we're in a premium for the week, as you can see. Can we see that? Yes, we can all agree. That's the weekly opening price down here. If you guys wanted to be sure, make sure I'm correct. Okay. Yes, there it is. Great. That's the weekly opening price. With that being said, as a day trader, you're telling yourself that the market is overbought. It is expensive. You do not want to buy at these prices. You would prefer, as the trader, to find a sell setup because it's ideal to you to sell higher, not to buy higher. That's not the name of the game for trading. Just trading 101. You don't buy high. You sell high and you buy low. So when I'm over here, I'm wearing the cap premium. Look for sales. That's the hat I'm wearing for the week. Now let's go into the day that non-farm payroll occurs. This is Friday. There we go. Friday to Sunday. That's close enough for me. Let's find the opening price for Friday. Did you find it? Yes, there it is. That's the opening price for Friday, 12 a.m. New York Eastern Standard Time. Many people ask this, oh, what am I supposed to be in? It's UTC 5, New York. Whether it's daylight savings time or not. TradingView is automatically going to do it for you. At that point, we're just going to wait. We're not going to try and trade London. There's no reason to trade London during a non-farm payroll day. Like, it's just avoid it. There's no point in trading that. Let's just see how that looks. Like we're not looking to trade this. There might be a setup here. They definitely might. They could have been a triple confluence idea. Let's just go check it out, just for the sake of it, right? Just for the sake of the for the video. That's London open. Follow me here. I know I'm moving a little fast. I'm talking fast because I'm very experienced in this and I'm very confident in it. That's the buy side there. You see how it takes out buy side first, and then it keeps this sell side here in that dead zone. And now it's above Sunday, 2 a.m. and 12 a.m. Let's go back and see somewhere along the lines here. Even though London is choppy, I just want to check it out, just to study it. Do we get an entry? Yes, we do. Look at it right there. 1, 2, 3. Look at that swing low. Again, the same fingerprint. This is why my brand logo or image is a fingerprint, because that's all I'm looking for. I'm looking for this sequence. You're looking for some clue to put you in the market. That's the fingerprint that the market shows to me and reveals itself every time that I like to take. I've been consistent with this entry. You guys haven't really seen me show a lot of different entries. If I'm consistent to what I'm looking for, I should have consistent results. It's not random results. That's not how we win in this game. We would go short at the bottom of that fair value gap. This is a triple confluence sell idea. 1-to-1. Oh, so it did work out. Nice. It definitely worked out for the day. I'm not sure. I think did New York come back down? We'll see. I can't remember. Because I woke up around 8 o'clock and then just waited for non-farm payroll and just waited for it to set itself in the right conditions. Okay. So I think it did survive. This London trade did survive going into non-farm payroll. So let's keep that in mind. Let's keep that aside though, but keep that in mind. London traders was able to execute a trade. They were able to execute a trade and hold the trade. Little to no drawdown. Well, a bit of drawdown. Now let's look at 5 a.m., which is here. The dead zone. The market is definitely coded, okay, guys? It's coded by time. It has to be. It needs to go off of something. It's not going off of randomness. If the market was random, nobody would be trading it. Listen again. If the market was random, nobody would be trading it. Nobody would be able to make consistent results if it was really truly random. What I'm showing you is a phenomenon that repeats. Whoops. Should show it New York open. Should show this too. Midnight opening price. And again, Sunday's opening price is way down there. It's way down there. Where is it at? It's so far down. It's all the way down there. We're really expensive for the day. Alright, let's continue. Let's go on a 15-minute chart because we need to frame out our liquidity pools. That's very important. And again, I love that I'm objective about it. I'm not telling you, oh, it's just like this region, this random box. This is resistance here. No. Oh, this is support. No, I'm telling you exactly where the sell side is, exactly where the buy side is. We're not taking a guess about that. So you got one sell side here. Make it blue. Blue. We got buy side. I believe this is going to be buy side. You got to watch it sometimes. Play it forward. No, so that was not buy side. So this is the buy side that we're looking at. Is this a double top? Yeah, it's a double top. It's a good question. Someone asked me, oh, what about double tops? Could they be used as buy side? I think so. And again, as I refine it, but as I give it to the community, this is the generic way I want people to think about it, okay? You're going to take the highest high of that session and lose that as your buy side. You can see it's tagged. Bang. Eyes immediately do what? My eyes immediately say, look down here, D. We're now above, now let's forget about 2 a.m. and stuff. We're now above midnight. We're now above New York open. We're now above SOP. We just purged buy side. We're in a triple confluence idea. Take a look at that. And look at all that consolidation. Like, oh, this is fat. You cut it off. You don't need to look at this. Don't even worry about that. We don't want to worry about that. Let's focus on the actual things that are going to make us money here. That's going to give us a better setup. We don't need to worry about trading here and psychologically psyching ourselves out. Oh, the market's going up, then we're buying. The market's going down, then we're selling. That's how you're going to hurt yourself. Your P&L is going to be terrible. Profit and loss is going to be terrible, right? Let's play it forward. We got that event at 8:30. I wonder why it's not showing. We got 8:30 event. And we also got unemployment rate too. Wow, great. Unemployment rate. And we also had the Michigan consumer sentiment. And there you go. Not from payroll. Housing starts. We don't care about the data too. Like again, news is excuse. I don't care about what unemployment data is, what the numbers are. I don't care. I care about the price action and the sequence of what's occurring. Let's play it forward. Nothing yet. Like absolutely nothing. Nothing yet. And there it is. Fair value gap. This is not the same entry I just showed you for every single example this week. Fair value gap, swing low. Same entry. I'm not trying to pick a order block or a breaker or mitigation or IVG. Nope, just a fair value gap, swing low. Fair value gap, swing low. And this happens, this entry forms when? Before 8:30. This is my advice to you. If you know there's a news event or major red folder event, you're either going to be in the market prior, right? Prior to the news event, or you're going to be in the market after the news event. That's if it gives it to you. After or prior. Okay? Whenever it gives it to you, it gives it to you. But most times, you will see the entry will form before the session, before the news drops, and then you'll be able to ride that train one way. Okay? Let's play it forward. You get this whiplash at 8:30, and it comes down, takes out sell side. And then it turns around again. And that was non-farm payroll. That was it. That was literally non-farm payroll for UCAD. That was an awesome trade idea. Triple confluence, sell, take out buy side, get back down to that sell side liquidity pool. Okay? So when people tell you can't trade non-farm payroll, you can. Is it always going to be like this for every single pair? No. Okay? It's not always going to be. I was shuffling around a couple pairs in the morning, around 8 o'clock, and I was looking at which ones looked more ideal to me, and UCAD was the one that stuck out to me, and I was like, okay, we're going to look at UCAD. All right? So hopefully you found this insightful. If there's any other questions, please let me know. If not, I really do appreciate your time, and I want you guys to be successful on your journey in 2026 as a trader, okay? You're not going to understand this overnight, but I believe I made it simple enough that even a child could probably follow the steps. There might be particular things that you might need help with, like how to identify a fair value gap, how to identify a swing low properly, what time sessions or time windows do I trade and not trade. Those things will come along as you stick along in the community. We'll teach all those things. And you'll be able to recognize that pattern over and over and over again and understand the sequence of how the price action actually forms. With that being said, I want you guys to stay consistent to a model. If you are not consistent to a model, you're not going to see consistent results. That's with anything in life. If you want to get good at doing push-ups, or you want to get good at doing pull-ups, or whatever, or a handstand, you need the repetitions. You need to have consistent results, consistent training. You can't just wake up one day and say, oh, I'm going to just do a handstand. I'm going to be able to do 50 push-ups straight. I'm going to be able to do 20 pull-ups straight. You can't do that in one night. Unless you're just talented, gifted, of course, right? Or you're just some prodigy. But that's not the case for the average person. Everybody's going to have to go down, do that due diligence, go back, research, right? I went back in time for December. And I went to track all my GU trades. I tracked every single GU trade every Monday. Let me see if I can find it for you guys, actually. Let me see if I can find it. What was it called? It's I just want to show you guys so that I'm not. It's Note, right? Is it Notion? Yes, it's Notion. I'm gonna share my tab in just a second. Just gotta log in. You're gonna see the data. You need the data, so it gives you. Take me home. You need consistency. You need the data. Share this tab instead. Okay, it's loading. Hopefully you're able to see my screen. This is every single Monday for a couple of pairs. Every Monday going into December. From the 1st of December and so on and so forth. I just kept going, especially with GU. I kept doing a lot of GU ones, right? Look at every example. Look at every single example. Triple discount buy. Again, entry where? Below New York Open. Sunday, the gold dash line there. You can see it's really faint. And then midnight opening price is somewhere back there. 7 a.m.'s opening price. Entry, same thing. Sell side. Purge, buy side revert. Fantastic trade. Let's go back. Man, I'll just show a few. Let me see. Let's look at this one. This one was nice. Another GU. This is the one I just showed you. Literally the first one I just showed you. December. Oh, this is not the first one. Sorry, it looked like it because it was a sell setup too, and it was on the first day of the year, first Monday, January 5th. Right. This is December 1st, the first Monday, the first trading day of that month, and it produced that same triple confluence sell. Very interesting when you start looking at the data. Same thing for EU, and it's a directly correlated asset. EU and GU move in the same direction. You can see it prints the entry above New York Open, and I couldn't put MOP and SOP in the screenshot because it was so below price. So this thing was so expensive. So I just put the actual price points there to show you where it is compared to where price is and the entry. Okay, it's well above it, and it gave that same entry. Look at the entry. I'm not BSing you guys. I'm showing you the exact entry. It's not like it's up in like some mystery. Deontay's hiding some secret sauce. I'm not hiding anything. I'm showing you exactly what I'm doing. Who is this? What pair is this? I didn't even write the pair. This is gold. Look at that. This is gold. People would love to trade gold, bro. People would kill for a trade setup like this on gold, man. Where's the entry forming? Above N, NYO, MOP, SOP. Speed, swing low, and done. Okay? Hopefully you guys found that insightful. I am hungry. I appreciate your time. Thank you for supporting me. I know I took a long hiatus. My brother just got a girlfriend. And definitely looking forward to my 2026 farm season with my business partner. Trying to now get a business loan so we can cover expenses for a vehicle and get the ball rolling in our community. Okay? If you guys do want to support me in my page, it's called Two Brothers Farm. The actual word TWO Brothers Farm. You'll find me on Instagram. You'll see what I do outside of trading. Okay? Hope you guys found that insightful. Let me just check the chat before I end it. No problem. And take care, guys. All right? Peace. I'll post it on YouTube. That was a great